Hey everybody, I've been peppered to death by questions regarding the ARM IPO over the last, I don't know how long, let me see, well, a couple of weeks, because it is the most hyped IPO in a very long time, in years. Everybody wants a piece of it, as it's a chip company, also it's AI related. So let's dig into what this thing is all about. By the way, quick shout out to my viewers in Los Angeles, second biggest audience city since inception after London. You'd think it would be New York, but I think all the New Yorkers left New York and went to different parts of the country. Who knows? Anyway, big thank you as well. So let's jump in. And by the way, this channel is about alpha. We don't care where it comes from, and we don't get married to any one asset. All right, so let's go. Let me see. Clicker works. Yes. And what I'm about to say is not financial advice. It's just how I view and appraise things. And of course, I have to mention this as well. If you want to amplify your intelligence and you like alpha, you like profits in the market, this is the best place to be. So subscribe. Now, I always put things out to the audience, to the community and Patreon. And this is the vote. As I checked after 3 hours, over 1,000 votes. 60% wanted this ARM IPO analysis instead of a face-off. So we are derailing our very controversial face-off series that does nothing but upset bag holders. But who cares? We chase alpha. And again, the win rate is extremely high. This is the Should I Buy series, and it has more than 92% win rate for things where they would say buy it or don't buy it. And by the way, as you know, from the weekend, I'm very picky. I only buy very few things, but when I say do not buy, typically they go down afterwards. And the last time I did an IPO analysis was Coinbase, and I'll put the video here after if anybody wants to go back to April 14th, 2021, which is also one of the first tops of the market. Anyway, let's jump in. We do have a detailed valuation process, just like for crypto. Same thing for equities, you know, what it does, ranking, disruption, value props, technology, financials. We'll do a lot of financials today. Talk a bit about the ecosystem, how long it's been around, competition and risks, very, very important. And then my price prediction at the very end. So it'll be a fun journey. And I'm going to go fast, okay? Because some people probably don't want to know how the sausage is made, but we'll, for those who do, we'll show it. So the IPO, ARM Holdings, the old ticker, actually, it went private back in 2021 or 2022, I think. Softbank bought it for about $30 billion. It used to be called ARMH, was the old ticker. And it's a chip designer owned by a SoftBank group. And it's set to launch their IPO next week, next Wednesday. And the price will be between $47 and $51 a share, according to sources. And that will raise about $50 to $54 billion. So you can guess the actual share price and how many stocks they're going to sell. Actually, drop a comment below if you can do the math on that. And they hope to raise between $5 and $5.4 billion if successful. And again, this is said to be the biggest IPO in years since Rivian. So what do they do? Well, I make this real small. They design chips, software for mostly embedded chips. 99% of the chips are embedded. It's a semiconductor company, but they don't actually make them. They help design ARM-based processors with a focus on CPUs and some GPUs. And ARM-based processors are integrated into devices. It's called a system on a chip, or embedded platforms, as they call them as well. And ARM is used by companies like Qualcomm, Samsung, Apple, many, many others that you know. And we'll go into some of the details as well. So the quick IPO preview. What's going to happen, as I mentioned, 47 to 51 bucks, what they expect. They'll sell nearly 100 million shares. If the market has appetite to digest that much, they'll raise about $4.5 to $5 billion at a valuation of 50 to 54. So who are the customers? Now, this is an interesting piece because you like to know who else is jumping in and what they're jumping in at. Obviously, when people get in pre-IPO, they do better. So these fellows, guys and gals, they bought $735 million worth of shares. They are called anchor investors. And that includes Google, Samsung, Apple, Microsoft, TSMC, Intel, NVIDIA. People get excited. Wow, look at these names. They're all buying it. Should I as well? Well, $750 million based on the valuation is only 1.4%. So it's not a huge amount of money. Bear that in mind. Now, It is very pervasive as a company. It's all embedded systems. They focus on hardware and platform technology inside mobile phones. 99% of that is that business. But there's been a huge shift to artificial intelligence on GPUs. And there's also been a re-emergence of open source. So although it looks like they are massive and huge, but remember, it's mostly smartphone based. But there's more. So the background behind the company, I mentioned ARM-based processors, focus on CPUs, system on a chip design. I'll show you a graphic of that in a minute, and some big customers. In addition, how they play. So when they talk about kind of system on a chip, the ARM CPU, they call it the brain of everything. And obviously, with some of this new rebranding in their IPO documents, 200 pages, I read them all, you can see a big focus is that brain of everything, that whole AI bandwagon messaging. Again, chip design. We have learned there's a lot of money in chip design. Look at NVIDIA. They don't make their own chips. They design them, though, and they're very, very successful. That's why everybody's so excited. So let's look at disruption of the industry. This is ARM's installed base, and it's increasing. They have 258 billion chips shipped through 2022. That is massive. And smartphones are, of course, the lifeblood of that. But when they ship it, say shipping chips, it's like the chips are designed using their technology. And then somebody else makes them and embeds them in a platform like a Qualcomm or an Apple, etc., Samsung, as we go forward. Thank you as well for the likes, everybody. I see you out there. Now, let's talk about AI. There's a lot of talk as, oh, this is going to be a cool AI semiconductor play. Let's analyze that. Yes, the ARM's chips can be used for a wide variety of applications, such as facial recognition they're getting into, and some NLP, which is natural language processing. And they have a strong ecosystem of partners, including many of the leading AI companies, like I mentioned, NVIDIA, Google, etc. But the arguments against them being a pure play AI company is their technology is not specifically designed for AI, but it can be used for other purposes. And ARM does not have its own AI research and development team. And ARM's chips are not the most powerful chips on the market. They are designed to save energy. So your cell phone doesn't die in a few hours. It lasts the whole day. So that's kind of the AI play. They're kind of positioning themselves as an AI play, but I wouldn't give them 8 cylinders of AI play. Maybe one, to be generous. Now, the value prop as well. They really focus on helping their customers be more successful, build more complex chips that are quicker and faster and easier to produce with more powerful CPUs, etc. as they go forward that use less power or lower cost. That's the value prop. And when you look at some of the stats around technology and developers, I always say follow the developers. They have a very large number of developer hours, 30 million plus developer hours since inception. And they say they have 15 million software developers on ARM. Wow, I wonder how they count that, but 15 million does sound extremely high as we go forward. And let's start jumping into some of the numbers and financials, because this is a numbers channel. Yes, we are looking at 1.037 billion shares. They are diluted shares, and a pro forma net income of 16 cents per share. And we'll come back to this later for valuations, but these numbers are very important when it comes to calculating what price to look for the IPO and how to make money. Now, social activity, just like in crypto, it is important to see how much social activity, social media following the company has. They have 79,400 followers. That's tiny for something that has 15 million developers. So either their developers don't use things like social or Twitter, or something's wrong somewhere on these numbers. If you compare the social following things like Google's and Oracle's and NVIDIA's, etc., Qualcomm, other competitors, it's far larger. So they don't have a lot of social activity. Now let's look at some financials again, back to numbers. And here there's two things that do give me a little bit of concern. One, ARM, which said it will trade under, by the way, ticker will be ARM. So remember that, obviously. But they generated $2.68 billion in revenue in fiscal 2023, down from $2.703 billion in 2022. I do not like shrinkage, okay? Shrinkage is good if you're talking about your belly, but not your top line. And bottom line as well, profit went from 692 to 675. Again, shrinkage there. So we are all about growth, and growth is important, but they do have some real treasures. They make 90% margin because a lot of it is royalty from software licensing, which is pure profit, which is incredible as well. We'll talk more about that after too. So let's look at some valuation numbers. Back of the napkin stuff here. They are now valued at 89 times earnings. And you compare that to NVIDIA. NVIDIA is considered extortionately priced. That's 32 times earnings. So that's 3 times more valuable than NVIDIA. And sales, it is valued at 26 times sales. NVIDIA is valued at 22 times sales. The 3-year earnings CAGR is 16.2%, but remember, earnings fell last year, and the average gross margin, as I mentioned, is 95% because it's all royalties, which is extremely lucrative. So lots of good and bad here mixed in together. But let's look at some revenue numbers. And, as I said, the scary part here is how the revenue has fallen. It was going up, actually you could say it went down 2017, 2018, 2019 kind of flat, up 2020, up big 2021, up a little bit 2022, and then flat down again. And that is concerning. So when I look at, and I'll show you some, if you look at the average revenue multiple for a chip designer, and I analyze them all, it's exactly 7.0x. That means a chip designer with $100 million in revenue should be valued at $700 million. And we'll come back to this later as well. And you'll see how I work out all my ratios. Now, the EBITDA for the company, we do not have the EBITDA for 2023. But the EBITDA, as you can see, has gone up, but I know it's going down in 2023. But the EBITDA multiple for a chip designer is normally about 10.3x per Statista. Again, we'll come back to that too. So if you have something like a company with $1.5 billion in EBITDA, 10.3 times that would be about 15.5 billion value. So let's look at the ecosystem as well. How strong are the partners? Well, per their own documentation, they call it near immeasurable value. The ARM ecosystem provides SoC design teams, tons of research that quantifies the estimate SoC design cost. Without the support of the ARM ecosystem, all these customers would not be as successful as they want. Hey, Stephen Weston, thank you so much. But again, you can see it is advantageous to use their software if you do have this type of SoC design thing in mind. Now let's look at relationships as well. They do have some long historic relationships with companies like Apple. The Apple relationship here, you can see technically Apple has a long history of using ARM architecture in various products, including iPods, iPhones, iPads, Apple TVs, HomePods, etc. And Apple ARM processors are produced by TSMC, although, this is important, Apple did sell its stake in ARM in the early 2000s, 20 years ago, but it does have a perpetual license to the architecture. So although they're probably not paying them now, they probably do pay them some type of royalty, of which we don't know exactly how much that is. Also, Qualcomm, big relationship here, but this one's turned a bit sour. ARM is suing Qualcomm right now over a licensing fee disagreement related to its acquisition of Nuvia. The U.S. District Court of Delaware recently released the case schedule, which shows that the case continues well past the timing of the IPO. Again, you don't want things kind of at your throat, which is the case here with Qualcomm, considering they're a customer too. Now let's look at longevity. ARM have been around for a long time. Does anybody remember Acorn computers? Well, the engineers came from there in 1983. They have a long development DNA. All the different products to ARM 11 and the Cortex, A15, X2, etc. I have no idea what the Cortex is, but anyway, that's the history of development architecture. Now, let's talk about the mothership, because this is also very important for the valuation as we go forward. And I'll tell you as well the link to how it's similar to crypto too. A company called Softbank made them private. It was a spin-in. But Softbank founder Masayoshi-san is embarrassed over their investment track record. Yes, they've made some big flubs in the past. WeWork cost them a fortune. Uber's doing well now, but where they bought, they didn't do well at all. They bought way too high. OneWeb. And does anybody remember Theranos? Wow. If you have time, that is a fantastic documentary on Netflix as to the DNA of a scammer. Everybody has to watch it. It's mind-blowing how Theranos fooled everybody. Anyway, they also fooled SoftBank. So their due diligence sucks. Anyway, they do need to replenish their balance sheet. They have a ton of debt, and they got some things they need to fix too. That's Softbank. I'll come back to them as well in a minute. Softbank Financials to prove their debt. You can see they have a monster over $150 billion in debt and they're losing money. So they will need liquidity. This is part of that liquidity funneling back in. In addition, one of the things, we're going to talk about competition for a second. We know who they deal with, etc. But there's a thing called risk-free, which I didn't know what it was until a week ago. But there is a huge popularity in open source embedded system development, and risk-free is the leader. They are an open source competitor to ARM. Companies like Apple have taken control of their architectural decisions and silicon design, and they are prioritizing independence and factors such as battery life. So they've come away from, leveraging things from other players like ARM to building their own, and also leveraging things like open source software. And this trend is typical in capitalism. And basically, as things get commoditized, like embedded systems, the capitalism fails, implies future profits are likely to be lower than historical ones. Therefore, valuing a company at such a high price could be a challenge, but we'll get to my valuation in a moment. Let's talk about other competition too. Chinese design houses. Wow. They have exploded. In 2023, they were a lot higher than 3,500. And this is because of the imposition of U.S. sanctions on advanced chip exports to China, and it's positioned things like risk-free as a beneficiary. And also, tons and tons, thousands and thousands of Chinese developers are exploring alternatives to risk-free in an unencumbered and dynamically evolving open source instruction set architecture. They call it ISA, and it's ideally suited to crafting tailored high-performance cores tailored for specific tasks. And mainland China now has over 3,300 of these IC firms, and by the end of this year, it'll be over 3,500. So as you can see, China is not sitting waiting for a sanction to go away. They are running ahead and doing their own thing. And in addition, let's talk about some more risks too. At a high level, what I see with ARM, one, slowdown in revenue, kiss of death. Again, very bad. Slowdown in earnings growth, very concerning, very bad. Companies bringing dev inside. Google, Apple, Qualcomm, Microsoft, they're all building their own chips. And the future is AI, and it's no longer embedded systems. Yes, when smartphones were hot, yes, this was a red hot area. Now the focus has changed, and it's changed to AI, and things that are truly AI pure plays will demand very high multiples. Also, open source competition and Chinese design houses. It's like, I'm seeing lots and lots of risk here. Now, let's talk about valuations. Shout out to Pierre Gerragu. His IPO prediction, he was on Bloomberg, and he believes by 2027 they could do a 27x, resulting in an $82 billion valuation. Fantastic, that's bullish. So if they plan to IPO at a $50 billion or $47 billion valuation, going up to 82 isn't bad in like 4 years. But let's look at my numbers and how I approach the valuation. And again, I'm very picky, okay? And I'm very conservative. So what I did was I took all of the shares, the 1.037 billion shares. I got the earnings multiple of 16 cents. I've got the EBITDA multiple of 1.48 billion. And I've got the revenue multiple based on 2.679 billion. And that gives us certain values. So if you take the 1.48 multiplied by the industry standards, well, we'll start with price to earnings first. The typical average P to E multiple, price to earnings multiple for a chip designer is 28.7x. That means a chip designer with earnings per share of $1 would be valued at $28.70. But here, this company makes 16 cents. And multiply that by 28.7 gives you an ARM valuation, my valuation, of $4.59, which isn't very much. Again, industry is 28.7 PE. The EBITDA multiple is 10.3x per all the research I've done, and Statista backs that up too. And you take 10.3, multiply 1.48 billion, you get a 15.244. You divide that by the number of shares, you get $14.70. Then the average revenue multiple is exactly 7.0x. Multiply 2.679 billion by 7x, you get 18.753. You divide that by the number of shares, you get $18.08. So the valuation methods and revenue multiple does best at $18. If I take an average of all of those three, you get $12.46, which is a lot lower than what they expect to IPO at. Also, my IA market cap valuation is $12.9 billion. Again, a far cry from $50 billion. So, conclusion. And by the way, we do have every video is turned into a Substack newsletter with all the slides, all the content. If you prefer to read or you want a refresher, it's 12 cents a day, and it's written by our community writers. So big thank you to that team. The conclusion is Softbank track record is poor for investments. Valuation is 3x what I appraise it at based on my models, based on industry statistics. Competition is coming from all sides. Also, embedded systems are becoming commoditized. Revenue and profits are falling year over year. Therefore, run, or what I like to do is short it after the IPO. If we get a bounce at the IPO, I will be the first in line to short this puppy. Anyway, that's where we are. Now, the most important thing, just like in crypto, very, very important. You know, I look at whales and whale bags and concentration amongst high wealth people. Well, this is worse than most crypto. If there was a crypto compendium score for SoftBank, wow, it would probably suck a lot. This is dangerous when there are large bag holders. And the SoftBank example of having one whale that owns 90% of the stock makes crypto look tame. So again, be careful of whale concentrations. Is not good for you. So thank you, everybody. Thank you to Patreon for voting on this great video. I really enjoyed putting it together. It took a week to bring all this stuff together for you all. I hope you got value out of it. And because there's no bag holders in the audience, nobody will be upset. So thank you, everybody. It'll be interesting to see what this does. I would love to see a spike to $70 or so, and then boo. And shout out again to Pierre. Hope he's not upset with my positioning on the actual stock. Thank you to everybody in the chat as well. Hope you enjoyed the show. Talk to you soon.